And with that, we are going to take a deeper look into the banking fallout. We're joined by Sean Stein Smith. He is an assistant professor at Lehman College at City University of New York. Thanks very much. We greatly appreciate you taking some time for us.
Absolutely, Sean. Happy to be here.
What did the reports reveal about last month's banking crisis that really, I guess, started about 6 or so weeks ago?
Yeah, and so the top 2 or 3 takeaways that I've taken out of these earnings is one, that the outflows of deposits from regional banks, mid-sized banks, community banks have been paused, right? They have been offset by the massive actions taken at the U.S. Treasury and by large U.S. banks, namely the top 4 U.S. banks, to actively backstop other institutions in this space. But it's also highlighting how nervous and how anxious customers and investors are with banks outside of the top 4 or 5 banking institutions here in the U.S.
And kind of give us some insight into that. To what degree do these regional banks, how important are they? And clearly customers are just kind of worried about their money, knowing it's going to be okay. So are the customers of these banks, how are they holding up?
Absolutely. And a core issue that's often overlooked in all of these conversations about $100 billion outflows and all the rest is that many of the customers of these regional banks, mid-sized banks, are entrepreneurs, business owners, and funds at these banks aren't just on deposit. They're on deposit to be used for rent, payroll, and other OPEX costs going forward. And so there has been quite a bit of anxiety and ambiguity as to how safe those funds are, both on behalf of the direct customers and all of the other indirect customers, employees, suppliers, all the rest who would ultimately get those funds down the line.
Yeah, and I'm sure for the depositors to hear the banks go and say, you know, everything's fine, we're going to be okay, that may just instill more fear. So what is next for FRB and Credit Suisse?
Sure. So in terms of FRB, I would say that we're in a cautiously optimistic time, right? That outflows have been sort of paused at FRB. Obviously, it was an awful month for FRB for outflows, but in terms of that one banking institution and the other banks that had been in the headlines, they have seemed to be stabilized for now. But it really does highlight that the current period of higher inflation and higher interest rates, don't forget, both of those are higher than pretty much every analyst and every banker in the marketplace now had ever had to deal with prior. So all of that is, on an ongoing basis, it's going to create anxiety and some more anxiousness on behalf of the institutions and their customers going forward. Now, on the side of Credit Suisse, that institution had been in trouble for a long time. It was a long list of issues, fines, issues with past employees, and a few hedge fund customers blowing up, costing them over $1 billion. Ultimately, it's a case of a bank that failed gradually and then all at once.
Wow, it's interesting. Now, this next question is sort of two-pronged. Where does the banking industry stand as a whole? And I ask this because we did a series of reports recently on people wanting to buy new homes, wanting to buy homeowners. And banks are snatching up a lot of property. And that makes people think back to 2008. Are we dealing with that kind of house of cards again?
I would say cautiously, not. Right? That I would say that in the current macro environment, I do not think that we are headed towards that same route because banks and other hedge funds, PE groups, are directly buying property in 2022, all of which causes issues on its own. But that in 2007 and 2008, what the real problem was, it was the mortgages being overvalued, poorly underwritten, packaged up, and then sold to everybody, and no one knew the actual underlying assets of those mortgages. So it's a bit different now.
And so a lot of people have said to me in the past, what about regulators? What have they been doing all this time? How could the situation get as bad as it did with FSB, with Silicon Bank, and also with Credit Suisse? Aren't these regulators supposed to be there pointing out problems, saying this is what you must identify and work on right now?
Excellent question, Sean. And it honestly really does highlight that the idea of a regulator, of an oversight body, or an external auditor isn't ever going to guarantee that everything's fine. But that in the cases of these institutions, be it SVB, Silvergate, Credit Suisse, all of these institutions were regulated by banking regulators and had undergone annual audits. So it really highlights the fact that the current audit rules or the current banking rules might not be up to par in this Twitter-driven or social media-driven banking outlook.
Okay, so picking up on that social media image, if you will, what about other areas to keep an eye on, and specifically digital banking?
So the whole basically onslaught of fintech and other online only banking institutions, I think on the one hand, it's a very good sign of innovation, lower overhead, better rates for customers and external users. But on the other hand, as we have seen, banking is not easy. And so as customers are able to put money in, take money out in an instant, 24/7, that's going to have to, going forward, really, I would say, be integrated into how businesses, banks and otherwise, plan how they manage cash balances, assets, and other external funds.
Great. Good stuff. Sean Stein Smith, we greatly appreciate you joining us, and thanks very much for that insight.